How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. And today we're going to be talking about Netflix. It had quite the sell-off in the market the other day, and I'm like, you know what? I want to talk about this on YouTube. It does have an impact on the market as a whole, and plus on top of that, many people are asking me, is now the right time to buy Netflix knowing that the stock pulled back? How can I get Netflix at a good price? And you know what? I'm going to show you how to get Netflix for $16. I should say around $16 or $15 a share. So you're going to want to watch this full video. I won't waste any more time. Let's jump into the agenda. If you're new to this channel, I just want to let you know we have timestamps down below inside the description. So if you're a shareholder or you're thinking about taking a position, I highly suggest you watch this full entire video. So the first thing we're going to go over is a technical analysis. We're going to be taking a look at the overall price action. We want to know support. We want to know resistance. We want to know what it looks like in a bearish case scenario and as well as in the bullish case scenario. And then we're going to go on Fintel, taking a look at the recent institutional ownership and short interest information. The reason why this is important because it does have an impact on the way the stock performs. And then we're going to take a look at the order flow distribution. We want to know the buying and the selling behavior on the retail side and as well as on the institutional side. And then when all of that is done, we'll be going into the final thoughts and as well as some more details. So let's get to it. So we're going to do a technical analysis for Netflix. Let's see how it performed on Friday. So it ended up closing at $397.50, being down 21.79% of a total of $110.75. Wow. On the low, it tested $379.99, and then on the high, testing $409.15. When we take a look at the volume stats on the day, you can see we traded at 58.904 million shares, and the average volume over 10 trading days is at 10.783 million shares. That's what you call selling pressure. Now, when we take a look at our chart, which is the daily chart, we can see from the RSI down below 10.99. That is crazy. And then when we take a look at our moving averages here on the chart, you can see we're below the 50-day, the 100-day, the 200-day, and of course the 21-day EMA. And we can say right now, Netflix is in a bear market. The last time Netflix saw these levels, and I was actually shocked myself when I was taking a look at the chart, was back in April 2020. So look at those gains that it made, right? Like that's just insane. But aside from all of that, before I'd actually jump into this play, I would wait for the stock to actually find a base. And where that base may potentially be could be right here around $373. So let's just call it around $370, especially if we continue to have market weakness. If it did break through this level, then don't be shocked if you see Netflix trading around $350. So even at $350, this would actually be an area where I would consider adding. If you're going to be looking into trading this play, then you want to wait for it to find a base. This is very key. The last thing that you want to do is go long and then the stock just continues to pull back on you. So that's why I would say you want to be very patient when it comes to this because there's still some more downside risk here. But if things start turning around inside of the market, I can see Netflix making a very strong move to the upside. But as far as taking a starter position, if you're looking at it as a long-term investment, this is not too bad here. And if you really want to make sure that you're getting a deal and you see even more downside, especially since interest rates will be hiked and so on, then of course, this is why I'm saying 350 is definitely plausible for Netflix to actually get to. And then even further, depending on what the conditions look like and so on. But I will continue to keep an eye on it. Let's move on to the short interest information. So we're going to take a look at the recent institutional ownership and short interest information for Netflix. So as we scroll down further on the page, green rows indicate new positions while red rows indicate closed positions. So we're going to be taking a look at the dates for the 21st. So we have Charles Carroll Financial Partners LLC that purchased 3,138 shares. We also see a closed position from Global Retirement Partners LLC. We also do see from Wick Capital Partners LLC LLC that purchased 462 shares. And then we also see from Nanfeng Trinity that ended up closing out their position as well. Scrolling down even more, you can see we have TFO TDC LLC that purchased 28 shares. And also we have Voya Large Cap Growth Fund Class A that purchased 41,628 shares. And we also have Aaron's Investment Partners LLC that purchased 288 shares. And those are all of the new and closed positions for the 21st. As you can see, there's a lot of institutional activity in regards to filings due to the fact that Netflix is a heavily traded stock and owned by a lot of funds. Now, when we take a look at the short interest information for the dark pool short volume ratio, it is at 46.56%. And then for the dark pool short volume, it is just over 11.66 million shares. Scrolling down further on the page, you can see the short shares availability is at 10 million, updated 8 minutes ago. And then for the short borrow fee rate, it is at 0.25%. When we take a look at the history of the short volume, we can see for the close of January the 20th, it was at 47.31. And then for the close of the 21st, which was on the Friday that just passed, it was at 46.56. So one thing that is clear, Netflix does have short squeeze potential, but it also does tell us there's a lot of negative market sentiment around the stock. So now let's move on to the order flow distribution. Now let's take a look at the order flow distribution for Netflix. So we can see here on the inflow, it was at 5.06, and then on the outflow, it's at 4.25. And then when we take a look at the breakdown, on the large, it was 0.76. On the medium, it was 4.29. And then on the small, it was 0.01. Keep in mind, these numbers are in the billions. And then when we take a look at the outflow side, on the large, it was at 0.40. On the medium, it was 3.81. And then on the small, it was 0.04. Taking a look at the large scale orders in the last 5 days, you could see for the 21st, it being that inflow of 356.57 million. No surprises due to the fact it pulled back a lot. When we analyze the numbers even further for the small scale orders that tend to represent the retail side, we had more selling than we had buying. No surprises there. Then when we take a look at what happened on the medium, we had more buying than we had selling. And then when we take a look at the large, which represents whales, institutions, and funds, we had more buying than we had selling. So again, loading up on the dip. And then when we take a look at the turnover ratio, it was at 13.30%. So this is very high for a stock like Netflix. Many people that buy Netflix, they are holding on to it. So seeing that the turnover was that high just tells us and confirms all of the selling pressure that was happening on the market on the Friday. We did notice this started in the after hours when they released their earnings, which was on Thursday. So one thing that is very clear here, institutions were loading up, and we also did see in the overall market, this stock is not far from actually continuing its pullback, and I'm going to tell you guys about that inside of the final thoughts, so let's get into it right now. So for my final thoughts for Netflix, in regards to the price action, I feel that it's not done selling off. I know as far as where we're at the levels where we were back in April 2020. That is crazy, so it pretty much erased all of its COVID gains. So this does provide an opportunity for anyone to look at it. I will talk about it further in a moment, but let me just get something out of the way very clearly. If you're going to be jumping into this play as a trading opportunity, I would be very cautious, and I would make sure I would set up a stop loss. Usually I like to wait for the price to actually find a base. Find some support, see some consolidation before jumping in, because then you can expose yourself if you're going to be going on the long side looking for a run up. Will Netflix recover? Most definitely, but I would be patient about it. If you are a long-term investor, of course, you want to be using a dollar cost averaging approach. Seeing where it's at its current levels, you might look at that and say, well, you know what, is attractive, or you might say, well, you know what, I think it's going to pull back even more. Let me just continue to wait. You got to figure out what is right for you. Also, when we went on Fintel, taking a look at the short interest information, Netflix also does have short squeeze potential. And this is part of the reasons why when the market does turn around and money starts flowing back into the stock, you can end up seeing it making a strong move to the upside. Is it going to jump straight up to $700? I'm not seeing that, but we have to understand and pay attention to earnings. Again, this is only applicable to you if you want to be a long-term investor. If you are a trader, like I said, you want to wait for the price to actually discover itself. And with the current market conditions that we are in, it is different. This is not going to be like 2020 or 2021. It's going to require a lot of patience and as well as a strong strategy. Netflix does have a lot to prove now. Yes, their earnings wasn't that bad whatsoever, but they did show slower subscriber growth compared to estimates. And this is a concern, and this is why the stock needed to get a haircut. You know what? I shouldn't even call it a haircut. This is why this stock needed to be bald straight. And the one thing that Netflix is going to have to really show, they got to show growth in other areas. I know that they want to get into the gaming space, so I want to see as far as for 2022 how much progress they make on that end. And for anyone that's looking to get a position into Netflix in the $15 area or in the $16 area and don't feel like paying the current price, or you know what, they just feel like it's too much, then you can look at actually the Canadian hedge version of it. And the ticker symbol is nflx.ne. And when it closed, the price was at $16.25. So this means if you want to load up on Netflix and you have high conviction, you could go right into this play and just buy it up at this current price. But keep in mind, it is hedged by the Canadian dollar. If you are a Canadian, I think this is a great alternative to use instead of buying the actual stock. If you do own the actual stock, hey, you can continue to hold on to it. There's no problems with that whatsoever. But I know many people are saying, well, you know what, Netflix is very expensive. And I say, well, you know what, the best way around that, just buy the hedge version that you can use to build out your position at a cheaper cost, and it does move fairly well. But again, it is hedged by the Canadian dollar, and it's great for all of the Canadians out there that want to actually buy American companies, because Netflix is not the only one that trades on the exchange, and you could be able to not have to convert every single time. So I hope you guys found that helpful. I'll make sure I put a screenshot somewhere on the screen, and you can go do some research, check it out for yourself. And if you want to take a position, by all means, make sure you're using a dollar cost averaging approach, because with a stock like Netflix, I feel that's what you need to do, because it does have a lot of growth potential, especially if it's able to actually be a disruptor in the video game space. Because one thing we do know, they already have a lot of customers. I'm a customer myself. So I hope you guys enjoyed this video, and we'll be talking real soon.